Hey, this is Andrew with Forma Financial, and this video is about locking in profits without closing your position. This is a big topic that comes up a lot. Say, I'm in a position and I'm up nice. What should I do? How can I protect? How should I hedge? Should I close a position? Should I open something else? What can I do to lock in my profits? All right, without getting out. I want to stay in, but I don't want to have the downside. I don't want to give back. Tough situation, right? Let's talk about it. All right, so quick reminder, this is education, and I'm going to show you a position and a trade here, but you need to make sure you really understand these kind of options trades and how they work before you jump right in. All right, so here's an account. This is live stuff. All right, so this is a real example and something that I'm going to do. And what you see here is, if you're not familiar with it, it's an options profile. And what I have actually done here, it's a beta weighted profile. All right, that means all the positions I have in this one account are there. So I have some crude oil positions, I have a little GBTC, some GLD, and I have no SPX position. That's the one I'm modeling here. And then I have the Vanguard intermediate term bonds in there. And there's another one. It's just kind of not showing up here. All right, there it is. It expanded out a little bit, so some VTI. Okay, this is a small account where I'm modeling some things that we follow. We're following some target volatility concepts. We're following some commodity trades. So I just have a live account to stay engaged in exactly that model. And what I want to do now is model a hedge, model a way to lock in profits without getting out. And so where we're at is a profitable position, but you can see, and what I've done is I've beta weighted, let me drag this up here so you can see, I've beta weighted to the SPX. All right, so in theory, not in theory, but currently, the market's 33.29. So the idea is, what if we have a correction? All right, so let me just kind of show you this. What kind of correction could we see? Let's just say we make, we kind of go down and break through the slow. Now, markets tend to break through levels, but not follow through. Break through, but not follow through. So here's an example here where this was the low and it gets taken out and goes up. And then here it takes out the high, but doesn't really go very far and then comes back down. And what does this move? This move takes out this one, but doesn't really go much farther than that. Comes back up, etc. Okay, so we see this a lot. Let me just even come back here. Break through this, but then come back inside. So it's very common to see, and I'm just a little anal about this. I don't like remove drawings. Clear them all. There we go. All right. So what I kind of think is reasonable is two things. Keep going up. No big deal. What's going to stop you? It's a bull market. Markets tend to rise over time. They can keep rising as much as they want. What kind of move could I expect to see that's reasonable also? Come down, take out this consolidation area, maybe follow through, maybe not. But just, what is this, 3,200, okay? This is also a 15-day, 15-session low right there. Come down and tag this. And from there, I don't really care. I don't care if it follows through. I don't care if it goes back up. This is just kind of a concept I think is reasonable. But if that happens, what will happen to me? Well, this beta-weighted portfolio, and beta-weighted means it just takes an estimate, having everything that you have on, what does it expect your P&L to be on something like that, accounting for correlations and all these kind of things. So if that's where we are and 3,200 is possible, well, $9,500 unrealized gain could drop to 93. Not too bad, but what if I don't want to give that back? Well, volatility might go up too, by the way, and so that would kind of maybe suppress that a little bit further. So let's go look at this SPX position. Now what I'm going to do is I'm going to uncheck everything. Okay, so now it's just showing nothing. I'm going to look at this trade by itself. All right, and this is called an out of the money butterfly. Out of the money butterfly. And so what does that mean? It's out of the money. All the options, this put here, 31.75. I'm sorry, the upper one is 32.75 is out of the money. The two shorts that make up each butterfly is out of the money, and the lower long is out of the money because the market is here. So the move would be down before any of these go in the money. And unlike a lot of options trades, in the money is what you want on a butterfly. In this one, you want to be in the money on this butterfly. So the P&L shows, and I just have two of them modeled up real quick to kind of show how this whole set of trades might work well together. So max, it's only $500 of max risk to the upside. And then if we were to go to 3,200, it'd be just today an estimated P&L just on this one position, $300 on, so what is this? Let's call it 320 on 540. 320 divided by 540. So that's 60% return on risk. So that's very good. Now, this isn't the kind of thing you should try to do like every week, every month, etc. You don't try to make 60% return on risk and leverage those types of things up. Something that can do that, you need to have a strategic position, or at least be willing to take good control of this, or not risk your whole account on something like that, because you can see this thing go to the upside and then lose its value and have 100% loss. So you only do it with a small amount of your account. So $300. Now, why did I do two spreads? Why did I target $300? Well, remember, what was my loss going to be? Let me uncheck that, go back to the original profile. From 9,500 down to 93.65. So about $200 or so dollars. All right, just a little over $200 of risk. So say, well, I don't want to just lose money there. I want to potentially make money on that, but I don't want to close my position. I don't want to close all my stuff just because I'm afraid things might pull back. So I'm going to add this butterfly. Now what I'm doing is I'm looking at everything together. And you may not be used to looking at something this way. It looks kind of weird, but just kind of stick with it for a second and look at what we have here. So what we have here is, now this is the current market, and this is down to 3,200. So right now it shows 95.89 unrealized, and then 3,200 is 96.85. That's more. It's saying if we sell down to there, we actually make money. Well, what if, remember, let's go back here. Let's get to the main point. We have to lock in profits without closing our position. So here, am I closing the position, or am I reducing my ability to make money? No. Let's go up to 3,400. 3,400, now two things happen. One is the purple line is today. So if that happens in the short term, I might move into negative P&L territory. But at expiration, that's that greenish blue line there. Over here, see this little bubble? This little bubble, it says the 4/17 expiration. That green line is showing wherever I'm pointing my mouse, the P&L there. So I'm going to keep your eye off to the left there. 3,400, the P&L is 9,800. Okay, so are you following? Make sure you follow what I'm about to say here. Where I am now, $9,500 profit. If we sell off, I make more. If we go up, I might be down a little bit in the short term, but there is no possible scenario over here on this math where as time goes by, I don't also make more. So in the short term, now what's my expectation? We're kind of high, and I think you can go a little higher first, or you can taper off. But I think some kind of retracement is possible, but I am not just going to short the market. I'm not going to just buy puts. I'm going to do something oversimplistic that is low probability and adds cost. I want to continually drive forward with the ability to make money, make profits, but take advantage of the fact that I'm already up and I think downside's possible, but I don't want to just short the market, okay? And, aggressive people out there will just short the market. They'll just buy puts, they'll buy put spreads, they'll do only a bearish structured trade. So I just want to play all sides in a way that all scenarios are potentially great for me, okay? So this one is short term, I kind of push it to gains. But if I'm not right, but at least if time goes by, then I can still make money. And if we just kind of get stuck in a range here, then that also rises up and I can also make money. All right, so let me show you this in what we call slices. I'm going to give myself maybe a little bit smaller. We'll do 3% up and 3% down. Okay, so I'm going to say, we'll make it 4. I think that'll work. 4% up, 4% down. Okay, that's good. So this is where we are now, and this is 4% up, and this is 4% down. And what I want you to look at is right here on this P&L, right there. I'm gonna see if I can do a little tool here to help you out. So what I want to look at is right here. So this is 4% up, and this is 4% down, and this is where we are today. So where we are today, there's a little bit of gains today because I have positions on and they're open, so they're up a little bit today. This is 4% up, and this is 4% down. In my scenario, I'm making my own discretionary decision about what I think can happen. I think this is first, and this is possibly later. Okay, that's it. I'm not going to go into detailed analysis and draw lines over the chart and explain that. I'm just going to say that's what I want to say is the best case scenario for me and what I think is possibly more likely. So either stall out. I think this is number one. Number two scenario is to stall out and stay here for a while. And the third case scenario is to just keep going up immediately. Okay. So now what I can do is I'm going to model this clicking forward in time. So I'm going to click up the date. This is the date, and this is, yeah, I get to go in the future. Isn't that fun? It's 1/20/2020. It's a fun date. Next month will be 2/20/2020. Anyways, that's enough of that. What I'm going to do is click forward into the future, which is obviously not possible in reality. So what we're doing is math. We're doing a theoretical, how the options expect to change in value over time. So as I click forward one day, you'll see all three numbers improve. The 0, so this is today. So look at these three numbers and then watch this. Go forward a day, they all improve. Go forward a day, they all improve. Go forward a day. If we go nowhere, I'm up more. If we go down, I'm up even more. If we go down, so then we go up, I'm down less. And so I'm just going to start clicking fast now. And you see over time, down becomes, the longer it takes, the better the scenario. Isn't that amazing? When people really want to get short, what do? They short shares, they short futures, or they buy puts. And what happens, like immediate anxiety about, this thing's got to go down now. It can't go up, or I'm in trouble. Or it can't just stay still, or I'm in trouble because I'll lose my option value. All right, I'm going to get a little bit short here and then say, take your time. I'm not worried about it. Take your time. The longer you take, the better. Would you rather feel that way? I enjoy feeling that way. Putting positions on and saying, no anxiety, no like neurotically like checking my phone every 5 minutes, no like opening up my platform again, closing it, opening, closing it, and saying, oh, is it going down yet? No. Okay. Oh, it's going down. Oh, no, stop going down. None of that. Say, oh, it's going down. Oh, okay. Now it's fine too. Later it'd be better. Let's keep clicking forward a little bit. All right. I'm just going to go out about a month. All right. So there's that 2/20/2020. So out a month, let's see what's going on here. If we stall out, my today's P&L of $20 turns into a month P&L of $400. That's cool. And if we go down, I make $600 instead of whatever it was, like a couple hundred. Oh, so taking longer is better. And then if I'm just wrong and the market goes up 3%, 4% over the next month, well, I actually don't lose anything. I actually make money. Is that a better way maybe? Does this accomplish our goal? Lock in profits without closing your position? Okay, if I take this off, yeah, obviously the better scenario is that we don't go anywhere, we go up. So, we're already up. I'm already up on this. And I don't want to just keep pushing it to say, well, it's got to go up another 4% to like keep making money. I kind of want to lock that in and maybe shift my focus to stalling out or pulling back in this one simple position without closing the position. All right, these are investment type positions. These are positions where the longer you hold it, the better. Lower cost, less tax issues. Okay, let that core position go. Put this one on. And now I've shifted the whole thing. I've flipped the whole scenario over where down is better, nowhere is fine, and up is still profitable. Isn't that cool? And here's the best case. Here's the best case for me. We just kind of bounce around, then pull back, close out the put butterfly, shift my bias back to upside, mean reversion upside, trend upside, long-term upside, and then ride that back up. And I could take a kind of a choppy, messy thing that might irritate and confuse a lot of people. You know, it took too long to correct, it corrected too fast, it broke out a level, but then went back up. And I don't know. This video is not about a prediction about we should follow this path. I think that's a low probability type of thing. But if we did, I'd have the best case scenario. And if we did, I could navigate that for what would be a 0 1 month move, could be, you know, several percent in this small account. Pretty cool, right? All right, so that's that. Nice simple position. Now, what's the position? It's a 50-point wide wings, 100 point span total. So this is 50 points away, this is 50 point away. You could widen this out for lower commissions. Do something like this. All right, I'm just gonna look at that by itself real quick. Oh, I narrowed it. Sometimes I do that. I get mixed up on which one's on top, which one's on the bottom. So here, go back this way. There we go. So that's a wide one. And what you can do is just do one of them. So you have half as many commissions, half as much slippage risk. And let's see how that looks together. Hey, maybe I'll like this even better. Yeah, it's pretty good. Pretty good. You have a little bit more risk to the upside. So instead of being up 100, you're up 60. You're lower cost. And I think that ended up about the same down there, but maybe slightly better. So in theory, the narrow one is better, but after slippage and commissions, it, you know, on a round trip slippage and commissions, maybe more similar there. So either one seems fine to me. Much wider probably is ineffective. Much narrower becomes very high cost and execution risk. All right. So a little bit, you know, so I just want to tell you, like, if maybe you're confused, more confused than ever right now. Maybe you're a little bit excited, but still not quite sure how to piece everything together. You're like, what are all these other positions that you even started with? Okay, let's focus on one thing. That the reality is there is a way that you don't have to close profitable positions to shift your bias and create an opportunity where you don't have to just flip over to being outright bearish, and you don't have to go flat, but you can modify, you can slowly shift your bias to some sort of omnidirectional, where it doesn't really matter what happens. I just don't really want to depend on upside as much right now. And you can layer in something that you could call it a hedge, you could call it a bearish trade, you can call it a lot of things, but I just call it a position that allows me to keep my core position open, but make money if we pull back, instead of losing money if we could pull back, and not lose money if it keeps going up, and not miss out on profits if it keeps going up. All right. And this could be, some prefer a position like this all the time, something where down and neutral is good, but up is moderately okay. Some do that all the time. The problem is markets can trend a lot. So I like to have upward bullish exposure when that fits, you know, and more often than not. But this is quite a sharp move, and I want to have a little bit less bullishness on right now. So either way, if you'd like to learn more about this, you can be a part of our membership and our community. We do live meetings, we do chats, we support our community, we answer questions, we share ideas, we do training, do a lot of great stuff like that. So if you're interested in that, feel free to head on over to formafinancial.com and check all that out. And I'd be happy to have you as part of our community, where I can help you navigate the markets, control your risk, increase your ability to be profitable in more types of market scenarios. All right. Thanks for watching this. Look forward to sharing more with you in the future. Talk to you later.